Hello, everybody. How you guys doing? My name is Francisco Mendez. I want to be talking to you guys real quick about probate codes, and how life insurance and a good financial foundation is going to help you to make sure you secure those assets and do not go into probate. Okay. Now, a lot of times people ask, "What is probate? What happens to my debts when I pass away? Do the debts go away, or do the family inherit them, or is it goes to my estate?" Well, real quick, I went ahead and did a quick Google search for you guys. If you guys can see, when someone with debts dies, the debts become part of their estate and are paid off using the estate's assets. If there's not enough money to cover all the debts, the remaining debt is usually written off. Crazy, right? So, which means is if you have equity in your property, if you have savings accounts, if you have any type of retirement funding, anything that's out there that is be able to be grabbed, the state, all that stuff belongs to the state. So, which means is all these creditors that you have, once they're notified that you have passed away, and believe me, they're going to be notified very quick when you of your passing. They're going to go straight into your probates. They're going to go into courts. Depending on your state, I always say everybody look into your state's uh, laws. How are the probate laws within your states to make sure you're educated enough to see what process is going to be able to be done. Also, once we do a financial analysis with myself or any of my agents, which is totally free, we'll sit down, we'll go over your states, see what it is that you need to make sure that needs to be covered, and we can plug those things in to make sure you have the right coverage, the right needed strategy in case the unexpected happens if any of your spouse passes away, and you guys be able to at least secure those assets within your family. All right. So as we were talking about it, from the passing of a member of the family, is a husband or wife, what happens is whatever's under that person's name, it goes into probate. So all these debts are going to go into probate. They're going to look at the estates. They're going to see what's going to be pulled out. Once these debts are paid off, whatever's left over is what comes back to the estate. Now, there's some parameters, some things that you can put in place to make sure you save that within your family, ensure that you save all your assets to ensure it does not go into prorate. So, one of those things is being able to have enough money set aside to pay for all those debts. Okay, so in the case of somebody passing away, that will go, those assets will be available for you to pay for those debts. Now, people will say, what happened in life insurance? Let's say if I have a life insurance and I do pass away on it, are my proceeds on my life insurance that's supposed to be paid out, is that going to be part of the prorate? I'm like, no, no, it's not. Life insurance money does not go to prorate court, but life insurance policy could be in place to cover the current debts that you would have to ensure those are paid off, the assets are secure, and then you have remaining money, either another policy or you have additional funds available that will still go into the family. How are we determining how much life insurance a body needs? Well, during our financial analysis, we'll sit down, go over all your assets, go over all your debts, go over your current income. What are you expecting at retirement? We'll sit down, we'll come up with a strategy to ensure that you have the needed life insurance coverage in place. Now, there's other strategy we will be able to sit down depending on your finances, what you want to do. We can look at annuities and we can look at life policies, either permanent or term for a short period of time to cover, like for example, a mortgage or some type of loans that you currently have. Let's say you took out a line of equity credit, a HELOC loan out of your property, and then you want to make sure that's covered. You don't want to lose the property. All this stuff we're going to be able to sit down and talk over to ensure you have the right plan in place to ensure that financial foundation for your household is covered. Now, one thing you want to make sure, and I want you guys to think about, is what if something happens to myself or my spouse? How impact is that going to be given in our household family? You know, overnight there's going to be a change for income. That money is going to start coming in. Do you have a plan to replace each of your income if something happens to you, either the unexpected that you pass away, or you get a critical chronic illness that happens to you, or terminal illness that no more you cannot work anymore, and you cannot be providing that money because you don't have that residually coming in, or your job is really something. If you're not really present, you're not making that money. You have something to cover those funds. All that stuff should be part of your financial foundation. You know, 2025 is definitely a year that a lot of people are waking up. All of us have experience or know somebody that of a passing of a loved one. We have seen the changes in the families after that time frame. You know, sometimes financial, sometimes objectives of the family's goals totally change. Sometimes even moving from the current location because they can no longer afford where they're at. Okay. Well, my family, I have a paid off house. Got it. You know what I mean? Oh, Social Security. Got it. All that stuff. I put a video below. Definitely look down the feed. You're guys gonna see it on my profile. Socialsecurity.gov. I exhort everybody to log into that website. Find out what is currently, how much have you contributed to your Social Security, how much of money is going to be available for you. It comes for retirement purposes, and plug that into your numbers, into your retirement income. How much money are you expected to live, to utilize when you retire? You know, and how long are you expected to live? Let's be honest. You know, if you retire at the age of 69 to 70, life expectancy could be 83, 85. If you're very healthy, probably late 90s. Do you have enough money saved to push you through your retirement age? Okay. Put inflation into it and to currently live the lifestyle you want to live. Let's be honest. Let's put it this way. Your current lifestyle right now, you're able to afford that at your retirement age. Think about it. All that is the things you want to be put into. In fact, and myself, I'm more than welcome to sit down with you. It costs nothing to sit down and talk. Let's go and talk. Let's get a financial foundation analysis done on you. Any of my agents around the states will be able to sit down with you. We can just sit down and they'll be able to address one with you, see the options that you currently have on it. And then I encourage everybody to look at your state laws to be able to see what are my prorate laws in my state. What can I do to save the title of my house in case I do pass away? Because the mortgage, even though if you pass away, the mortgage is still going to be there. But do you knew that you don't have to lose your house? There's things out there within your state that you can protect your property in case something happens to you. Let's sit down, let's talk, let's have a great conversation. I love educating people on this. I love talking about it. I want to make sure that everybody on there understands that financial foundation, financial literacy is something very critical. We have to know. Please share this video. Pass this video along to somebody that might need it. You know, that they're looking at getting something in place. If somebody's entering the workforce, 18, 19, 20, 21-year-old, your kid, let's send them, let's talk, let's have them. The younger we start a plan, the more beneficial for them is going to be. Okay, do not wait until it's too late to start a plan. It's way more economical for a 19, 20, 21-year-old kid than a 30 to 40-year-old person later on in life to get something established. Okay, let's lock things in at early age. A lot of times we think about now, tomorrow, and next week. Let's think about 10, 20 years down the road. Where are we going to be at? Where my financial health is going to be at? And what can I do to ensure that my family is established with a good financial literacy education so they know what they're going to do with the funds, all right? Looking forward to talk to each one of you. Save your property, save your money, be smart about it. Let's connect. Let's have this financial analysis done to you. There's no cost to you. I don't charge anything for that. I'll give you a PDF document. You have everything that you need to make your planning, and then we can definitely identify where we got to plug those holes on your financial foundation strategy to ensure you have a strong one and continue moving forward and save what you work so hard for, your house, your income, and your future, right? Looking forward to talk to you guys. Have a blessed one. Success for the best.